excited to really come on, guys, because first of all, Mondays I always give the show to Vinny because guys, if you know, you know, plugging into the calls every single day of the week when it comes down to either Mondays with Vinny or as well hopping on, the sessions, really both sessions, because I know Coach O pretty much hosts pretty much calls during the pretty much the afternoonish, like 12. And then you have as well like 8 p.m. around this time too, which is you're getting value back to back to levels. And I definitely want to give a lot of shout out to the level traders, the community itself, because um, levels is just something where I truly, truly believe you should never overlook. Because number one, it's really, really based off like the market structure. But the way on the how the style is really just taught, the way on how it is that you don't need to have something super, let's just say advanced in other words. Um, it's just amazing how taking a strategy, making it make sense for not only ones, not only hundreds, but thousands of people, what else can you ask for? And I always truly believe this, that every strategy works, you know. I'm gonna give a shout out to, the trendline trader community. The rally truth is this, and the chat is open for the communication on this, but you have trendline traders, you have harmonics traders, you have pattern traders, you have, again, support resistance traders. You have different types of communities where you can literally trade in any type of way. And the best strategy is not the person to the left telling you it's the best strategy. The best strategy is something that you can stay consistent, disciplined, and you can make profitable to it. That's the best way to keep a best strategy. And so yeah, me and Vinny can kind of go neck and neck, being like, oh, like, levels or SMC, this, and that. But when you put two and two together, you start to realize on number one, how similar it is, and how levels I truly believe is the best way to really start off with. And then you can transition into the SMC. If it's something like you start to ask yourself why certain things happen, because what I'm gonna do is I'm gonna share my screen real quick. And I literally just got off a call with one of my girls, Jasmine. Shout out to Jasmine, she's on here. But we're really going deep into like really more so like the crypto side and things like that, kind of gain more of an idea with everything. Um, but when you start to look at certain things here, guys, and one thing I'm gonna be showing you guys, it's a lot of pictures and drawings. Like, if you know me, I like to talk a lot when it comes down to pictures and drawings to show you guys what my brain is literally thinking about. But it's like, if you think about it, you have certain ways on how you can really just approach this way, and I like to think of it like this, where on the level side, again, never, never, never overlook that strategy. Like, again, because market structure is key, like hands down. You can't beat it. Doesn't matter. Like, oh, but I know imbalances. Like, no, market structure is key, or I know fair value gaps. No, like, again, market structure is key. And so on from what I've heard from Vinny all the time, again, shout out to him because we had went to a traders lock-in in August in Arizona. And that's when I was able to see like Vinny like really live in action right there. So it's pretty cool. Um at that moment, I remember him saying, because it was so and I think he still remembers this. It was so funny because he had put me like on the table and we were talking about on how he was like, Neri, I want to test your eyes real quick. I'm like, what are you talking about? He was just like, I want to test your eyes on how, what is it that an SMC trader, right, can see inside the market. And I'm like, what do you mean, obviously? Because, you're talking about like, we like to go into depth, why certain things happen, institutions, and XX reasons. But he was like, I want you to sit right here, and we're going to back test this real quick. So we went into literally back in the market. So we went literally like this. It wasn't with the DXY, it was with something else. I can't remember. We went back into the market and he was like, okay, here you go. Don't look. Awesome. I want you to mark this up with just using levels from what you know right now. And I was like, gotcha. Like, because I see it all the time, left shoulder, head, change of character, etc. Like, enter there, call it a day. And again, from what I was, from my understanding at the time. And so he was just like, cool, well, go ahead and actually mark it up and see how, back test it for me. And so I remember in that moment, I literally marked it up. So like, again, it wasn't about speed, but I marked it up and I'm like, pop, 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 boom, played it and it sniped. And he was like, cool. He's like, that's amazing. But that wasn't the assignment. I said, do it at the levels perspective. You did the SMC way. And I was just like, What the heck? Okay. So we went back again and we did it. And this time it took me a little bit more longer. And I was just like, what the heck? Like, why is this taking me a little bit more longer? Like my eyes are just seeing certain things, and then like I'm having to transition to something else that again is very similar from potentially how the module looks like, right? From how the module looks like. Because here, guys, like if I show you my type of way, how I literally took what Mike teaches. Like what I'm about to show y'all guys, it's not my thing. It literally is literally the duplication of what Mike Nab does. I think that's like the best thing I did was just be the best copycat trader, do what he did, take his color candles, look how he looks at the market, and I literally just did everything like that. Because if someone asked me, how did you get your black and white candles? It literally is because of Mike Nav. When I was trying to learn how to trade at the time being, I was studying. The only reason why I had black and white is because Mike Nav had black and white. And I was like, you know what? Let me change my color chart to black and white. So I feel like whenever he's on Go Live, like he's using my chart or he's like marking up on my chart. And it's so funny because I learned the funniest ways, guys, but it's like it helped me because I had like a black and yellow charts and backgrounds and stuff like that. But for some reason, when I just did this, I feel like when I'm on Go Live again, my eyes are just trained to see it now. See it, see it, see it. So do what you can to learn it. And whenever I was doing it at that time, being with Vinny, he was like, okay, cool. Like, now mark it up again with how it looks like whenever you are trading again with levels. And I took my time with it, but not realizing like, again, all it takes is this one thing. And I'm not trying to sound like repetitive with this, guys, but this is something that we can kind of overlook as well too, where a lot of us we try to seek for the best strategy, or we try to seek for something that's a winning strategy, which is again, I just named all of them. Again, the chat's open for anybody who wants to like talk about it. But anybody that I've seen people who trade trend lines
Right.
and they're still pretty much profitable and they're winning with it. They're disciplined, they have their rules. I've seen people who, again, who have some educators who trade harmonics and things like that. They're profitable. You know, the resource that we have, there's a section where you can literally just buy the tools, and those pretty much are profitable too, different ways and strategies and how you can use it. So what I'm trying to say right now is when you lock into one thing and one thing only, everything starts to make more and more sense. Because tonight, like I said, you have two women's strategies from what me and Vinny have been learning from, not from what we created ourselves, but what we learn on the Go Live. What we learn on what, whether Coach O teaches or, Mike Nav. It was actually pretty cool because if you were there for the New York session a few months ago, I think it was like in November, I think. Yeah, in November. It was pretty cool to see two and two, with each other because you had Mike Nav open up for SMC, and then you pretty much had a transition into levels, which was never been done before, where you'd have two, somewhat different type of strategies that trade very similar on the module, but how they're able to explain it in a potentially different way, but it still makes sense. And I feel like that's what me and Vinny have right now. We kind of go like bump head, like, head to head with it, but in a good way, not a bad way. But it's pretty cool to actually just see on how all that pretty much happening to it. So, guys, before anything, just to make sure, drop a number one chat if you're with me real quick, because I want to make sure that whatever I'm saying is not just nonchalant talking, but it's just hopefully that it is you're catching on what I'm trying to say, because I'm not a Go Live educator, yet, but I'm not one, right? I'm just a student like you guys. So what I'm about to show you guys tonight is obviously what I'm showing everybody and what Mike Nav shows, and then a little bit more into depth with SMC. And just to really understand why certain things happen. I think, and it's pretty funny because I remember actually telling this to somebody as well too on my team and stuff, and we were talking about on how you have two different type of traders, where at the time Vinny had explained to me, I was just like, hey dude, like you're trading levels, but like what do you think type of like trader that is? And he was like, well, with levels you kind of just go for just looking for the setup. If the setup is there, just take it. If we're not looking for the snipericious entry, like we just want to make sure we have an exact zone, the area where we want to enter, and go from there. He's willing to take certain drawdowns because of he's calculate the risk that he has in that moment. But we find the setup and just go from there. And so for me, whenever I was asking him, I was like, dude, but like, you're trading like this, but like, why there? Like, he was like, oh, because like, again, please don't quote me too much on it because again, I don't, no disrespect, again, no disrespectful levels, but it's like, I really focus more on the SMC side. So I study a lot that more. But like, I was like, but why there though? He's like, oh, because of X reason here. Like, I think it was like the starting point or something like that. And he was like, um, and I'm like, but why this here? And then I just kept saying, why? I think I was annoying Vinny for a second. Like, I think he was really getting really annoyed. And he was like, so many why questions, Neri. Just trade the setup. And I was just like, but dude, I was just like, but no, there has to be reasons behind certain things. And that's when I realized that I was on the SMC side, if you're more of like a trader or a person that likes just to know why certain things happen and just like to know more information by a lot of things, and you're willing to be patient with understanding how the market really operates and, what the whole orchestrated thing is happening here, then at that point, you can allow yourself to start saying, you know what? I can see why certain things are happening, or I can see why things in the market are, happening in certain time frames, or the list goes on and on and on and on. So I started to realize, like, you know what? I'm a chismosa, like I'm a why person. I like to know why things are happening. And so you can use chismosa in a great way, aka, a student that likes to know a lot of things, where I was like, you know what? SMC is the way for me. I remember when you did that to me, facts. I remember, yeah, even Giselle, shout out to Giselle out here in Dallas, Texas. I remember she was like doing levels and I was asking her certain questions like, why is levels doing this and that? And she would tell me why. But again, it's never a bad thing. I think that's the beautiful thing about trading is that everybody has different points of views. So that is just something that you can kind of intake and see it on a bigger scale. I'm a nerd on the charts. I agree with you, bro. I'm a nerd too in the charts too. That's why right now we're about to, really go down deep dive into this as well in this. So that's whenever you can just see it. If you're more on the level side, like I said, from what I've been learning a lot with Vinny on the levels community, it's like, guys, we just look for the setup. If the setup's there, you take it. If it's not there, don't take it. Don't force it. On the SMC side, like you're really more so like, okay, why are things happening and why is the market moving in a certain way and things like that. So that's just the way how you can actually look at it from that perspective. But diving a little bit more deep, guys, you want to be super picky. I know, I get it. We hear it, Neri. But no, you want to be super picky. It's an easy thing to say when you're outside, not a position, but it's a little bit more a different story and a different emotion environment when you're live in the market and then your whole chats are just blowing up into saying, damn, we're big in profits right now with, with oil, or, we're deep into, profits with Ethereum, things like that nature. So it's like, that's just something that you want to be able to be aware of is that you're going to have to be really be okay with just number one waiting, but as well understand the emotional side of it, of just being picky. Just like no one in this, and again, if it's you, drop a number two in the chat. But when you go pick your fruit, you're not going to just pick anything. You're going to literally stand there, and literally grab a fruit, make sure it's actually looking pretty good. If it's good, you put it in your bag, you put it in your basket, and you call it a day. But, and that's the same thing what you want to do here. The more picky you are, the more better. Because we hear this quote all the time. No trade is better than a, excuse my language, but a half-ass trade. Like think about it. Who in this damn call will get in a half-done house right now? If they're building your house currently right now, and you said, you know what? They're literally in the middle of building my house. You know what? I just feel like today I want to move in. I barely have a roof over my head, but I want to move in today. No one's probably going to do that, right? You're probably going to say, you know what? Let me let these builders finish the house and then I'm going to move in. So it's like the same thing here too. Why would someone move in, get into a position that's halfway done, but showing you signs that, again, that potentially is more like a 50-50? Then you ask yourself, okay, cool. If it's 50-50, what can cause that? Emotional, attachment, and like, no, no tener seguridad, like, you're not really that, you don't have that reassurance, in other words. And so that's just something that you really want to make sure. If you're not willing to get into a half-done house when you're building something, why would you get into a half-done trade? If they're building a car currently that's still missing two more wheels, you're not just going to get into a car just because. You want to make sure that's fully complete, you know? Again, it's one thing to say, but it's a different emotion when in that moment you have to really apply what it is. Really apply what we're learning every single day, because it's, again, you don't want anything to go over your head, especially whenever it's again, it's in those moments and you're telling yourself like, man, I don't know, I gotta get myself into it, or things like that, or I have to allow myself to just just run with it. But quality setups, guys, simple as it is, but sometimes it can be super simple, but at the same time a little bit more harder, because usually what's easy won't it's kind of not easy to do either. But quality buy setups, keeping it very strict and easy. People overlook awareness and intention. You never want to wake up whenever it's just like, oh, I just woke up right now. There's a trade going on. Oh my gosh, my nav just called the trade. Let me just get in a buy because I'm with one eye open. I'm looking at my chart and I'm just like, oh my gosh, it looks like it could be a potential setup, or it looks like my setup. When in reality, you're not even mentally 100% there. We talk about we want to treat trade like a business, but then the way how we're reacting, or the way our emotions behind, trading view, or our trade lockers, they don't really match up to what our trading view looks like. you know so you want to allow yourself to make sure that you are treating this as a business, because again, you don't want to just do something because someone else is calling it out. Because you're gonna do two things. Then drop, and guys, you let me know in the chat. I don't know. I want to make sure I think I'm talking to not say the right people, but I just to know that my message is going straight to you. But like, what's your goal inside trading? And there's no right or wrong answer with this. Do you want to become an independent trader or a dependent trader? And again, there's nothing bad with it. You know why? Because again, the platform offers tools where you can just come in, buy some tools, and just copy and paste. Dependency or independent. There's literally no right or wrong answer. And if anybody tells you that, then forget them. Independent trader, independent, master, but independent. Cool, I don't mind copy and pasting. Perfect, exactly. Perfect. So simple as it is, guys. Obviously, if the independency is there, we have to allow ourselves, we have to be first. If anybody is brand new here, you have to be dependent to be independent, but then eventually, again, when you're independent, doing the same muscle memory over and over and over again. And keeping it very simple, guys, right? Whenever you're looking at more so on the SMC side, overall, either two, you want to have a quality setup or a quality sell setup as well too. Either or, right? So if you're barely brand new and you're trying to learn the idea of what it is SMC is or how it is, my biggest suggestion for you is have some type of module. A lot of people can probably be like, hey, I see a left shoulder and a right shoulder appearing, or I can see the setup for levels. And again, that might be a thing, but this is where, again, it's very similar, but I would say we like to put it in a different perspective now, right? And so here we go. This is where the fun part gets along. Keeping it very simple and easy. There are different types of liquidity, okay? I'm gonna work my way from the beginners to media and to advance over here. But just kind of working our way here now in the middle, right? Liquidity, guys, is going to be an easy way to kind of look at it, right? It's going to be an easy way as a magnet inside the market. The market likes to move where there's money, right? Same thing as us as human beings. Like, obviously, if someone said, hey, there's, $20 above this building over here, you're probably going to go up there to get that, that building, the money. Let's say it was worth more, but money, right? People chase money. Same thing here too. The market pretty much likes to move where there's liquidity, where there's pretty much money to be taken out, right? Because us as traders, right, on the SMC side, what we do is this. Obviously, you have the big institutions who are coming in who control 95% of the market. And this was my thought process at the time being. This is how I was thinking about it. I'm like, okay, well, I'm considered a retail trader because number one, yes, I can say I'm trading SMC or want to learn it, but I don't have $1 million in my live trade account yet. Or as well too, even $10 million is not nothing to the market either. $20 million is still nothing to the market. So like, AKA, this is still, from what I've heard from Go Live and stuff, it's nothing to the market. It's still retail. But the thing is this, if institutions who hold trillions of dollars are the ones who actually are the ones who are the market movers, and they, orchestrate this whole movement. Think about it. You start to ask yourself, okay, if I can't beat these guys because I literally control probably less than 5% of the market, me in my head, I'm just like, if 5% can't be 95%, why would I go against them? Why can I not just think like them and be by their side? Right? Just think like them, move like them, see how they operate. And that's what I thought about. Instead of fighting against them, let me just be on your side and just move like you do, think like you do. And again, maybe potentially see how the banks and how the real market started to move, right? So I started to look at it in that perspective. I'm like, okay, cool. And so that's where, again, certain things start to dive in more deep, you know, because again, on the checklist, keeping it very simple. Maybe some of you guys' checklist is a little bit more different, but just to save us some time, what we're going to do is we're going to go through all the way till 9, because, 10 and 11 are just like risk reward, set your alarms, and like, you know, risk rewards its own training, and then set an alarm is pretty easy, just set an alarm. But you have it here where now we're on this perspective, trendline market structure. Well, for anybody that now it's more intermediate, on this case, this is probably gonna be the most important thing for you here, because keeping it basic, just basic, basic, basic. If you're in an uptrend, potentially you want to be looking more so on the buying side. If you're on a downtrend for a bearish market, a very strong bearish market, potentially look for some sells. Keeping it very easy, simple. So at least this number 2 will allow you to know if you're looking for the buys or if you're looking for sells. And so now if you're looking for buys, cool, pull up your buy quality setup module. If you're looking for sells, look up sell quality module. Look for that right there. And so when you put 2 and 2 together, okay, perfect. Now what's next? Our number 3, liquidity. Well, there are different types of liquidity, guys. Again, it's like the magnet to the market. If you think about it, look, you can check it out yourself. Backtest it. Let's say here, I don't know, we can go somewhere random, go here, and you can just be like, okay, well, there was once potentially, this is all downtrend side liquidity, because you want to know there's different types of liquidities. This is where eventually the market can come back to, right? You have equal lows here. Well, it's kind of taken out right there, but you can go into more detail if you wanted to. You have equal highs as well here too, liquidity, and then eventually just press the play button. You can see the market eventually will attack it. When? We don't know, but eventually it will. And so you'll just see over time, here's the money just being sat here, takes time. Again, never rush the trade, but eventually the market will come attack it. There goes one attack, and then eventually, well, we'll see if it gets back there. And then so we could just go exit. Oh, and there you go. Damn, look at that.
No mames, no te mueres.
It took about 155 days for that to happen, right? Someone got excited. It took 155 days for this to happen, just to clear out this liquidity. But again, it's just like it's like magnets in the market, guys. That's how I like to look at it. So it's like you have different types of liquidities. So what kind of different type of liquidities are those for, again, for more like the intermediate side? You know how you have uptrend liquidity, you have downtrend liquidity, you have equal highs, you have equal lows, right? Consolidation, right? And then if you want to go even more into depth, you have internal liquidity, you have external liquidity, things like that nature. So you have all this happening inside that moment. So it's like you have to find out when you are using your confirmation checklist here, where is that liquidity side, right? For that number 3 that we have here. What kind of liquidity are you looking for? We have to see. If we're in an uptrend scenario, easily, again, where is it that we're finding that? And actually, I'll even show you guys here. Let's even do Solana, because I know right now everybody's talking about cryptos. Look at this. So if we kind of go back into here, this is not Solana. And we showed this on the backtesting call too. It was pretty cool because it was actually, imagine being able to see this perfect timing. It would have been pretty fire. But I always like to do this. Keeping it very simple and easy, guys. Look for the setup that literally is very similar, correlated, that your eyes catch to it, right? For the SMC or anything that you're trading. don't, if you're in the moment where you're just like, kind of looks like it, again, would you kind of live in a house that's kind of done with a roof that still has a hole where the wind is blowing through the walls because there's no like, there's no pared or nada así, like there's no wall? Probably not. So it's like that's where you want to be super attentive on that end. Because again, you don't want none of that to happen. Here, give me 1 second. So then here, right, let's go based on Solana. Right, at the time being, we have Solana that's working its way up way high, right? A little slight bullish going on. You can go on a bigger time frame here too. Very bullish still, working its way up higher. But then now the question is this. Taking our confirmation checklist that we have here, awareness intention, number one, well, I feel great. I feel very attentive. I know you guys feel attentive. Perfect. I'm ready. Did you just get out of bed? If you didn't, cool. Prepare yourself for it. If you did, then again, don't rush. Like I said, treat train just like a business. It's actually pretty funny when you think about it. Even in Wall Street, they trade like, and obviously in the offices and like in the buildings, and they're attentive and they're there, and none of them are trading, and they're trading trillions of dollars. And none of them are like in bed trading trillions of dollars in their bed. So, maybe just kind of food for thought. But here on the confirmation checklist here, guys, one thing I like to look at here is that when I'm looking at this, I want to go on a time frame that literally makes the most sense to me. And so I can see here there was once liquidity, big drop down. Cool. There's obviously once liquidity here, like small little liquidities, but there is this zone here that really caught my attention, and which is maybe on a perspective, it's like, it looks like a candle to just, market working its way down lower. But what I did was I wanted a time frame. Again, sometimes these time frames probably don't make the most sense to a lot of people to be on, but it did for me. The time frame that made the most sense, where there is liquidity being built up here, which is slightly an uptrend liquidity, and then all of a sudden you have an institutional candle to the downside, where now the institutions come into play, right, and clear and sweep all that money out. Because at the beginning, from what I've learned a lot from the Go Live sessions on Mike Nav's, their goal was to always go up to the upside. They wanted that to happen. But before all of that happened, they needed to take out money. They needed to take out retail traders, and they wanted to get people out of it before anything. So what they did first was they clear the money out for the liquidity, for the people at the bottom, for supporters, and then eventually they reverse back to the upside, saying like, you know what, cool, we did our job, now let's go back to the upside. And so that's what happened. They cleared all that money out. And so if you look at it from this perspective here, the institutional candle, I'm going to highlight this for you guys so you can see it and drag it to the right side. Here in this zone is where potentially now we can say that this might be a potential area that eventually the market come back to. Oops. But let's not get a little bit too to the curve. Let's still continue one by one. So what I always do is, again, highlight the institutional candle from where it begins, aka where it began for me, from here, institutional candle from wick to wick. Okay. So then now the number 5, the imbalance. And this is where it gets pretty good, because I really like this, that I just added a little bit, just a cherry on top from what Mike Nav teaches on his Go Lives and all the Go Live educators, is the imbalance perspective. Now, I'm going to highlight the imbalance for you guys so you guys can really pay attention to what this is here, okay? Because I get it. We all know what an imbalance looks like, and if you don't, pretty much it's a big candle that pretty much pushes price to a certain zone when there's more certain people, whether it's more of the buyers or more of the sellers. And you can actually see this here. And again, I'm going to keep this where anybody that's looking at the the imbalance here, you're aware that anything that's inside here, when we drop down to the candles, it's part of the imbalance, okay? But I really want you guys to focus on that, okay? So I'm going to keep this right there. Now, number 6, keeping it very simple, just like Levels teaches everybody. Change of character, which is super important, because that's how you know that the market is pretty much going in your favor, and you can see that there is some type of change in that direction where it's continuing to the upside. Price maintains, right? Above. But this overall change of character. So I'm going to put C. There's one time whenever I first got, when I was learning this, like I didn't know what C's change of character standing for. I called it chalk or chalk. Don't hate me, everybody. I remember I used to call it that. I don't know if anybody can relate to that. But here, change of character. Now, it's actually a pretty cool thing to use, the line graph. I don't really use it too much, but when I do, I like to use it where now if you can see it, you can kind of get an idea where the market actually is, where it's coming from, and the actual direction to see if it actually broke, right? That change of character. And so now, overall, let me just put this a little bit more back because this doesn't still count from what I'm going to show you guys. You have the mitigation zone. Again, mitigation zone is now you're actually narrowing down where potentially price could reject off, guys. Where now, you can ask yourself, maybe the market might come down even more, a little bit more lower into the zone and then reject to the upside. Because think about it. It's like a lot of people are saying, well, why can't we just sell now? And then because if we know it's going to go down, why not just sell now? But then again,
So it's going like,
no, like the thing is, you ask yourself, what do you mean you know it's going to go to the downside? How do you know it's going to go down? You really know it's going to go down? And if you do, how? But then you're like, well, it's because we have a zone here. Well, guys, remember, even though you're trained SMC, you're not better than anybody. It's not just because you mark it up, the market's going to do what you want. Again, it's you have to prepare yourself for quality setups. If it's going to come down here, it'll come down here. If it doesn't, then imagine you get in a sell, you don't even know what your risk reward is, and then it goes reverses on you to the upside. So like here, again, mitigation. Where does the institutional candle begin? Right there, from the wick. And where does it end? So highlight the whole box. Now I've narrowed down potentially where we can see price react. Again, there is a little bit more of a bigger definition to it, but I'm trying to save a lot of time right now. You have the bounce back boot camp to kind of give more of a bigger understanding to it. But now price wants to come back into this zone to pretty much close out orders for more of the people that are a little bit more advanced to this. And so if you look at it from this perspective now, now that we have that, divergent correlations. I personally don't use too much divergent correlations with Solana, just like with, I don't think, and again, you guys can correct me because I just literally listen to Mike Soltero and the Go Love Educators. But like whenever I'm marking it up, I just mark it up. There's nothing really too much to compare with it. From what I know. And again, everybody correct me on that. But here, I really don't really use the correlation to it because nothing isn't that similarity to it. But now, number 9, inefficiency entry. Now, on my perspective, I like to have 3 confirmation entries. Now, you don't have to have 3 confirmation entries, but I like to do it myself. But just to kind of keep it very simple, inefficiency entries is this right here. And here's just to kind of get a more of a simpler understanding from what it looks like. This is not the true definition, but how to identify a true imbalance versus an imbalance. Again, this is a simple way to look at it, not the true definition. But if you can see the wick to wick, if there is a gap between these 2 lines of the candles and there's space, it's an imbalance. On the right side, you're going to see a balanced candle. If you have a wick that gets printed out, to another wick that gets printed out, to another wick that gets printed out, if these right here, these candles here touch the same line, if both wicks touch the same line here, this means that the candle is filled and it's called a balanced candle. Okay? And usually when things like this happen, guys, the market always wants to come back to fill it in to eventually, who knows, fill it in, reject off of it, who knows what, but eventually just wants to kind of fill it in right there. So using that example there, guys, this is where the inefficiency comes into play. And I should have done this at the beginning so I can show you guys. But one thing I like to do here to kind of keep everybody's attentive with this, the institutional position, what I'm going to do is I'm going to highlight the institutional position because it has some type of similarity or relationship with mitigation. And I'm going to highlight the imbalance with the inefficiency. Because for me, they have some type of, not say meaning or correlation to the T, but the way how I'm explaining it to you guys, it kind of does. And look at this. This is what I mean by that. Because we just talked about it right now, right? Where the institutional position, it had some type of relationship with the mitigation because we had to point out from where does the institutional candle begin to where it ends. We highlight the whole zone. This is our mitigation zone here, right? Mitigation zone. Now, imbalance and efficiency entry. We just highlight the imbalance, but this is where it's going to get good. What we're going to do is we're not changing anything. Mike Louis says come inside the zone and then take off from any type of wherever your entry is. Here, we're going to look for another imbalance, but it has to be inside the mitigation zone, not outside. I don't care what's outside. If there's you can see there's imbalance here. I'm not worrying about this because I'm not trying to enter up here and put in my stop loss this low. I want to enter inside my zone. So I'm going to drop down anywhere in here to find the imbalance that I just showed you guys. So let's go on a 2-day time frame. Ah, okay. So I see something. There goes a wick from here. And then as you can see, this is still all imbalance, right? This whole thing. But remember, these two I usually give myself 2 entries, guys. So either the lower or higher entry. But again, if one of those entries are outside the mitigation box, I don't care about it. It has to be inside the zone. So let me drop down to a 1-day time frame. Okay, looks like here, this whole imbalance. But it looks like here is still the mitigation, right? I mean, not mitigation, but the inefficiency from wick to wick. Let me drop down one more time because I want to confirm if this is a true imbalance. Okay, looks like this is still at the same spot. This whole thing is in balance. Okay, let's just drop down. Usually I just drop down 2 time frames, but I'm just trying to show you guys something where this is a true imbalance, where every time you drop down, you get that. So what I'm gonna do is this. I really like this whole zone here for an entry, something in here. So if you want to use a confirmation, in other words, because as you can see when you drop down, all of this was in balance just on a smaller time frame. That's the reason why I kept this box here. If I go back to the 4-day time frame, y'all gonna see it. 4-day time frame, it still highlights this. You see that? But when I drop down, for maybe someone that's still training their eye, maybe you wouldn't be able to tell that. For more of my advanced people, this is probably a good way to kind of break it down to the newest students as well. You can highlight it like this and still see this is still part of the imbalance. Every single thing that's just more into detail. Now you could do that for entry, and then as well too, you can use your Fibonacci tool just to get more of an idea where you want to line up. And we look at this. What a coincidence. The inefficiency entry that I just marked up before even using Fibonacci is aligning perfectly with the 886, roughly. Okay, that's one confirmation. Second confirmation was overall the Fibonacci. Interesting. What's the last one we can use? The last one can be the last previous support and resistance, which is, hey, at the end of the day, that, again, everyone wants to debate about it, you can, but I know a lot of people who trade support and resistance and they're still profitable. And look at this. Let's see here. Looks like this whole zone here, this whole price area, it's some type of reaction. When pretty much price in Solana comes here, buy, 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 sell. It reacts. There's a reaction to here. It's a very, very high price zone action here. It reacts. So there goes 3 confirmations for an entry. The last previous support, or resistance, the inefficiency, and your Fibonacci. There's 3. So hypothetically, if I wanted to get into this right here, and let's just say you're trying to exit out at maybe a 1 to 3 if you wanted to, just be more conservative, you can do that. If you wanted to shoot for a little bit more higher for this imbalance there, attacking these equal highs, or even the all-time highs, maybe you just wanted to do that too. And look at this. You go back to that here, and let's see. By taking those step-by-step scenarios, right over here, those step-by-step scenarios, let's see, right? We come here, price comes in, interesting, wicks that first entry, right? But again, I'm not tripping because that's not my original entry. That's outside the mitigation zone because again, confirmation, the institutional candle began from here to here, right? It looks like it did come into here to close it out. But again, if that was the move, then that was the move. But I'm going to keep this because I feel more confident to come over here more lower. Price comes into there. Price, maybe thinking price is leaving. But look at this. Interesting. It's struggling. It's starting to build up liquidity. Okay. Liquidity building up. More people are buying. Let's go. Solana's up now. Let's go. But then now it's building up more liquidity up here. But then what happens? Price comes in, wicks you in, and that's it. Takes out all the retail buyers here who are buying super early. It takes out these money liquidity here too, aka liquidity. To the T, to the entry, as I say, right? That's what I like to call inefficiency, or in other words, a snipericious entry. And, I like to call it snipericious, but the snipericious entry, where you can come in. It's not all about having the snipericious, but at least some type of minimum risk to still have this great reward to it. And you can see, and that's exactly what Solana did. And next thing you know, that could have been the push for you to see history being created again within cryptos here, right? And this is exactly what I do. What you see here, I just do it to the T. I don't change anything. I just make it as simple as possible. If it's there, it's there. If it's not, don't take it. Because again, why get into a trade that's not fully done when you can allow yourself to wait for the better setups and get into better things, because that's just what the game is all about. Exactly, snipericious. That's what it's called. The snipericious stuff. If you know, you know. And it'll work the same thing as sell. Same thing as a sell will be the same exact concept. But let me look at the chat real quick because I know I was just kind of going in. What is it called? The Fibonacci tool. Yeah, he got you. Not that this busy. I'll be listening though. Got you, Guido. I'm marking up serious probability. Yep, exactly. You're not alone. Yep. Someone asked, I am new to this trading stuff, but what's something that helped you understand how to buy or when to sell or hold? So you're asking me, someone asked, I am new to this trading stuff, but what's something that helped you understand how to buy or when to sell? Well, the biggest thing here is is just really, really, really understanding number one. If I don't know if we're talking about investments or you're talking about really more so like the trading aspect, but I'm assuming it's trading. But if you're in the perspective of trying to buy and sell, okay, what are you trying to buy and sell, and what is your entry module? Because you have to know why it is that you're getting into an opportunity. For me, when I'm looking for entries, I'm looking for something like this, right? Keeping it very simple. When I'm selling the market, I'm looking for something like this. Okay, because guys, understand what doesn't look, entries don't pay you. They get you into a trade to take action and get you in. Stop losses, they don't pay you. They pretty much protect you from the market to be more conservative. What pays you is take profit. It's your exits. That's what's called take profit. So it's like when you ask yourself, okay, how am I going to enter? Well, what's your module? Does it look like this? Does it look like maybe something that's completely different? Okay, cool. That's your overall perspective on the entry, but what's your take profit? Where are you going to get out at? Because you want to figure out how long you want to hold. Well, it depends. We're talking about, you can go based off of two types of exits. You can go based off of a fixed exit, which is only going based off of risk to reward. You're going based off 1-to-1s, 1-to-3s, etc. That's all you're going for. It's just risk to reward. Or you can go based off the technical. And guys, drop in the chat, what kind of exit are you? Are you more of a fixed technical where you're looking for liquidity, imbalances, equal highs, equal lows? This is more of a technical exit. I would say I'm kind of more so on the technical side, but you can say both as well too. And that's what I was saying. Technical. Cool. Pretty cool. Move forward, technical exits. Yeah. Shout out to Julius. I like that, bro. But yes, guys. I'm not sure if you guys have any questions. Don't want to take up too much of the time right now. I know I kind of went a little fast, but I was trying to put as much as I could into one call. Because dude, there's so much to talk about, if I want to be completely honest. But it's like, how can you fit so much to talk about into 1 hour? It's kind of like a little impossible sometimes, and there's just so much details that you're leaving out. But you want to make sure everything's, in it. So what I would say is this, guys. If there's one thing, and before I pass it off to Vinny, is get ready for really more so on the bigger perspective that's about to happen within the market, especially like when people are talking about, cryptos and, all this meme coins, Trumps, and people are, doing insane things right now. Um, be ready for it, right? Be ready because a lot of things are about to happen. Technical would be looking at the other side of the trade, like if you're buying, looking for someone else selling. Yes, so like you're looking for more like looking to the left. So that's how it's look. Like another way you can put it is here before this whole setup happened. Let me go all the way back. Put it back to where it was. If you go back over here, it's like for me to say, hey, I was willing to go for a 1 to 3 was because maybe I'm like, hey, I'm going to technical base because when I look to the left before all of this happened, oh, look, there's equal highs. So you can say, oh, 1 to 4, and then that takes off. You know? I got you, Alonzo. Sorry. I got a message right now. Here you go, bro. Here's a, I'll probably send it inside the Powerhouse chat again, just so people can have it, but here's a screenshot. And then here's the example for a cell. Quality cell setup. Cool, 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 cool. Bueno, guys. Besides that, if anybody has, how many pips do you usually risk? I really go based off of number one, yeah, my risk, like 1%. On the forex pairs, it just again I go based off 1%. But like with indices también 1%, which is for me $20. $20, $25. But then again, I think with indices, I'm still calculating it because my broker only allows me to trade like with regular US 30 and not US 30 mini. So it's like if anything that's beyond 20 pips on US 30, I know it's gonna be more than 1%. So I'm like, probably not on this one, but I go based off percentages of 1%. Pips, like you can kind of say I'm gonna risk 3 pip, like, and it's possible, guys. I've done it once before. It was pretty cool. A little cool series that I had. I risked like 7 pips on US 30 to make like 272 pips. It was pretty cool. I was like, what the heck? I was like on a small time frame, but you can pretty much do that. Oh shit, we have a Latino American in the house. ¿Cómo están mi gente? Shout out to them. They literally only speak Spanish, guys, and they still hop on and kind of learn everything. When you learn trading, you don't really know the language barrier. The charts do all the talking. So, what are pips? It's these right here, bro. Overall, another consider like you can say the points in the market of how many times the money pretty much is just the market's pretty much moving to the upside. Like here's an example you can calculate from the ruler. You see how here, let's say if you were trading, I don't know, like a US 30, for an example. Gosh, man. But for a US 30 here, from this entry to there, this moved up about 1,900 pips, right? 1,900 pips here, which is the movement from this point from where you're measuring to where it is of how far the market's going. So the units of measurement as well too. Yep, better way to put it. Cool. Awesome, guys. Well, what we're gonna do is we're gonna wrap it up from here. Hopefully y'all pretty much gained some value. Hopefully it wasn't as well something repetitive. Guys, if there's one thing I can leave you with tonight is be obsessed. Don't be when I say this, like if your goal in trading right now is to overcome a lot of obstacles and outlast a lot of people, understand that inside trading, you're probably gonna have these moments. Everybody starts off right here. And over time, when you get started, you get excited. But then there might be a point that every year you're gonna hit a consolidation phase. Every single month and year. Let's just say this is someone's first year on a small time frame, right? Here's this example. Let's say this is your month 3, this is your month 6, this is your month 9, and then your month overall 1 year. This is a whole year. Every cycle, right? You might hit this. You might get a point where you're excited, and next thing you know, you start to kind of feel this type of, like, I don't know. One moment I'm learning, and then next thing you know, when I do it on my own, I don't see it. I'm learning, and then I don't see it. But then you get you do that break of structure, right? And then you might hit that month again. You're learning, Something like that. Record structure. It's just over and over and over. And believe it or not, you know, I think it can hit everybody else too. Even if you go surpass 1 year. When you hit your year and a half, you might feel those moments too. Maybe not, I'm not saying quitting, but you'll feel those moments where you feel like you're stagnant until you continue. Until officially, when you hit that maybe third, fourth year, you may still feel it, but eventually, once you surpass it, it's like there's no going back to it. It's like that's it, going to the upside. So, heads up, guy, and shoot for the stars, shoot for the sky, because every setback that you have is setting you up for a greater comeback at the end of the day. So, guys, I'll go ahead and just pass it back to Vinny. Vinny, thank you so much. And other than that, we'll see you on Go Live. So let's get.
Hey, let's go, bro. Oh my goodness. Did I not tell you guys? I feel bad for anybody who did not hop on this call. Guys, Reggie just put in Neri's Instagram. If you guys would like to give her a follow, because I sent this out to many people who are not on or in the Powerhouse squad. So Reggie sent in Neri's Instagram. If you guys want to go ahead and give her a follow, give her a quick shout out if you guys took some pictures or took some videos. But guys, I told you guys, gems after gems after gems. And for me, I don't care about the repetition. Like trading, when you have a style, when you have a checkbook, it should be repetition after repetition after repetition. You should be looking for and saying the same things, so I do the same thing for you guys on the levels call. So I'm glad that she did that. And I'm glad that she mentioned, sorry if it was the same, if it was repetitive, because that's what it is, guys. As soon as you guys understand you guys' system, it's all about repetition. Right. So I hope you guys got a lot of value. I was in student mode. I took some jumps out of this as well. So wait till the next one, guys. I don't know when that will be, but wait till the next one. Neri, I want to thank you for hopping on this call and giving me your time, giving us your time. I definitely appreciate it. I was in student mode and I definitely learned something. So with that being said, send some fiery emojis to Neri, guys. Let's get it with the fiery mode. Let's get it. But that is it for me, guys. I have a call to hop on right now. So I will see you guys on Friday, hopefully from Texas. Right. So if we hop on, we may not have a levels call though, just to let you guys know. We may not have a levels call depending on what we got going on Friday in Texas, but the plan is to do a call. So I will definitely update you guys in the levels chat or in the Powerhouse chats. So appreciate you guys for hopping on. I will see you guys on Friday. Trade responsibly this week, guys. Let's get it.